SPY dark pool saw billions worth of accumulation right before Jackson Hole, followed by an insane amount of Tesla call flow, which looks to be breaking out of a massive pennant right now, plus an incredible correlation that points to a drop after Jackson Hole in 25 out of 27 years since 1998. Will 2025 repeat? All that and much more in today's video. Make sure to subscribe, like the video below. Let's get started. So it's been a while since I provided an update on the Fed money supply to SPX ratio. As you can see here, it's worked really well thus far, especially since COVID, after we had that injection of trillions worth of stimulus. And then after that 2022 dip that you can see from over here, was able to reclaim that trend again and kind of see that they continue to increase the money supply despite them attempting to taper it off back in 2022. So even though we did have that big dip from the tariff fiasco earlier this year, it just has continued to follow this trend, continue to follow the money supply. So it's a very clear correlation between SPX and that money supply. Wanted to update you guys with that. Next thing I want to talk about is some of the dark pool accumulation that we saw last week before the Jackson Hole event. You can see over here that we had a lot of that accumulation down here around 635.56 and then some more activity around the 639. I'll scroll down to show you it. Actually, go back to the entire week, give you a better picture here. But if we go all the way down to 635, we can see some of those prints. For example, this 1.6 billion and then 1 billion. This was right before Jackson Hole. So all right size. Still would prefer to see, as you guys know, we've been watching these videos, prefer to see over 3 billion in a singular order. However, both of these I'd tie together just because they are just off by 2 cents and they came in around the same timestamp. So likely the same institution. In this case, we're looking at 2.6 billion. So decent amount for that. And then if you scroll up over here, you can see 1.5 billion for this 639.61. And then right next to it, 1.2 billion. So almost again at that 3 billion mark that I'd like to see. So decent amount at that 639.63. And then a little bit more from up here. I believe this was earlier in the week. We saw 1.1 billion and 1.1 billion respectively. So a decent amount when you pair both of those orders together. If I go over to the chart, it's actually a beautiful chart right now because this is a Wyckoff accumulation pattern. If you remember from the video last Wednesday, I referenced a lot of those puts that we saw heading into the Jackson Hole event. And I talked about them being likely hedges. And if they were, at least bears, were serious about a continued drop, you'd want to see more of those after Jackson Hole. So going into Monday, Tuesday, Wednesday of this upcoming week, you'd want to see consistency around those puts. Otherwise, it is very clearly just hedges. So far, it seems like a lot of those hedges were closed after the event just because Powell talked about potential rate cuts and we saw that spike. But if you do want to see continuation to the downside, kind of like we had from last week, would like to see those puts end up hitting the tape again this week. But I still personally, as you guys know, am bullish. Will continue to be as long as we're above key levels. For example, some of these dark pool prints from earlier weeks, these 626.30, 627.59 levels worked as a beautiful support back then when I was doing those videos, and will continue to provide a bullish bias as long as we are above it. And now we have that accumulation pattern that I mentioned to you before, both dark pool prints around this range, around 635 from over here. Plus we had that mini range breakdown and reclaim. You guys know that when you have a range reclaim, that's very bullish. Typically a lot of the shorts that piled on during the breakdown over here, when we had that breakdown, they get squeezed out once it does reclaim it. So we're kind of starting to see that right now. And also this is a variation of a inverse head and shoulder pattern. So you can see here, so it would form the right shoulder up here and then continuation thereafter. So a couple bullish options here in terms of this setup. If it were to break down, I'd say back below that dark pool print around 635, it would invalidate this entire setup here. So that's kind of the best stop level, a little bit further away from where you are right now. That's just because this was a very impulsive breakout since we had a lot of volatility with Jackson Hole and that rate cut expectation. So that's the plan for this week, looking at something like a retest of 642.52, the lower end of this range. As long as it can hold around here, I really like the chances of this continuing into the 650s next. We'll continue with a lot of that bullish momentum that we've seen this year, especially after the tariff fiasco back in March and April. So that's the plan for SPY. As for another ticker that was really interesting this week, I'm going to go to the flow. Tesla was really impressive on Friday, specifically after Jackson Hole. There was a couple prints before before as well. So kind of bullish bets before that event. But you can see here 5.3 million, highly unusual, out the money print for the 9/12 expiration, 4.8 million, 5.4 million, 5.4 million. So you're looking at $20 million worth of premium between these 350 9/12 orders. A lot of premium even for Tesla. All of these marked as highly unusual on Cheddar Flow here, just because you can see they had the blue behind them. And these were executed around 333, 335, 335 over here. And if you remember, Tesla actually closed with a huge breakout. I'll show you on the chart at 340. So they are up going into the close on Friday. No sign of them exiting their position yet. We'll get confirmation tomorrow based on the open interest. But this is super interesting to me, not just because of the very bullish flow I just showed you, but also there's a huge pennant pattern on the daily. It goes all the way back to May where it started. You can see here both this green line and then this other green line here. This is a very clear pennant. It's been building up a ton of momentum in between this range when you see this consolidation, kind of like a coiling spring. And when it's ready for it to either break out or break down, you'll see all of that energy that's built up, momentum is built up, manifest in price. You'll see an impulsive breakout. In this case is what I'm looking for. So we had a nice attempt to break out over here, followed by a retest, and then continuation is expected thereafter, as long as it continues to hold around 330. So that's the plan with Tesla. I can see this going all the way up to 384, maybe even 404 within this quarter three, maybe early quarter four at the latest. So a lot of bullish opportunity here for Tesla. It's only a benefit that it had all of that bullish flow. And again, we'll have that confirmation based on the open interest come Monday if they are still holding. It looks like it. We haven't seen them close yet on the bid, but ton of volume, as you can see here on order details over that existing open interest. So a lot of directional buying, and so far it's worked in their favor. Also, one other thing, if you've watched to this point in the video, we do have a nice discount for you. Just use that code that popped up on the screen. Click the link in the description. You can have the free trial. It's a 7-day free trial. If you don't even like it, you can cancel before the 7 days is up. Otherwise, you'd get that 15% off discount once your subscription starts. Now, the last thing that I do want to mention, super interesting. I found this post. I don't know who this person is, Aussie Livin'. So there's your credit for this. But we did see this post come after Jackson Hole. Super, super interesting chart where Jackson Hole for the last, as you can see here, since 1998, so 25 out of 27 years, it has fell leading into September and October. So if I zoom in over here, you can see all the way back here in 2019, this was the case. We had it also in 2020, also in 2021, and in 2022, 2023, and 2024. So if this theme continues, especially in the last 6 years that we've seen it drop, then we'd expect some type of a drop heading into October. So something to keep in mind, especially with the levels that I showed you before on S&P 500, if it were to fall down back below that dark pool level around 635, it would both invalidate the inverse head and shoulder plus Wyckoff accumulation, and there's the potential that it could fall a lot more with a correction, because we do have bearish seasonality coming up here in September and October. And before, after Jackson Hole, we've seen that manifest in price as well. So this is something I just wanted to bring to your attention. Found it super interesting. Thank you for the post and the correlation analysis here, Aussie Living. And then one final thing I want to mention is PLTR's flow that we saw last week. Truly incredible. You can see this post over here from August 20th, a bunch of premium, specifically for some short dated. As you can see, the August expiration here, these already expired, but also very long dated, these leap orders, both the June 17th of 2027, December 17th of 2027, etc. A lot of premium across the board there. And if we go to Cheddar Flow, you can see all of these bullish bets here. If we pick something like this December 17th of 2027 print above the ask, you can see all of these were executed above the ask throughout that day. Decent volume spike relative to the stable open interest from the previous week, just because it is a leap contract. And again, a lot of bullish activity on the chart. It is interesting as well, mainly because we had that 25% drop, if you remember from the last video, where Jim Cramer was calling for 200 at 190, and then it fell 25% immediately right after that. So it fell, but then it did have a pickup candle over here. And during this day, Wednesday, the 20th, is specifically where we saw a lot of those leap contracts get added. So it looks like they're looking for continuation from here, even though, yes, I realize the valuation is a bit ridiculous at this point. This one's purely a momentum play, just because it's literally up however many percent. We can actually check right here how much is up since 2023, looking at about 2,000%. So a bit ridiculous, but as for short-term trading, they're still adding into bullish bets. They're looking for continuation, kind of a if it ain't broke, don't fix it method, since they've been continuously buying as it's went up over and over again every single day. So something that I did want to mention here before the end of the video, and actually while I'm here, really quickly, I'll show you this Bitcoin. We still are within this bull flag on Bitcoin. I've been talking about it for weeks now. Still is yet to break out. We kind of had a fake out over here and then it collapsed back under. But so far, it did form a double bottom pattern, as you can see from over here, based on the Jackson Hole event. And so far, it is also retesting the top end of the flag. You would like to see some type of a curl setup. We had a retest there, curl around 114 or so thousand, and then continuation higher from there. As long as these lows hold, really, as I've been saying, as long as 110,000 holds, this will continue to my target of 140,000, regardless of all of this chop and back and forth that we've had recently. So wanted to provide an update there. Still in bullish on this one, since there's a beautiful macro inverse head and shoulder on the daily supporting this breakout above key trend lines, as well as a bull flag. So a lot of bullish aspect to this. Regardless, as always, appreciate you guys watching this video. I'll see you next time.